They affect the stocks of the airline that actually had the plane that crashed. Asiana is down fairly sharply, I think, but the rest of them, the rest of the airline industry, I think it'll be a blip. I mean, the odds are that you're going to get run over on your way to the airport before you're going to die in the airplane crash. So, you know, it's a safe way to go, and I frankly was amazed at the success they had in getting people out of that thing and the relatively small number of deaths involved. So I took it as a plus in a sense.
Okay.
A positive commentary on the industry. I mean, yeah, when they do crash, I mean, it's big and dramatic, but they probably lost just as many.
Right. It sounds like
the spillover effect, right?
Sounds like the spillover effect is minimal. I want to switch to some other sectors, Jim, that you have been focused on that you like, and one of them is the auto sector. And Dom, that's what you're looking at right now.
Well, I am looking at the auto sector because it's in a cyclical recovery. You think people are going to buy more autos, more durable goods that last longer. But here's the problem. Delphi Automotive, Goodyear, those are two big parts manufacturers. Look at how strong they've rallied. Delphi up almost a double, 98% this year. Goodyear up about 43%, far outpacing the S&P 500. The real question is, why aren't investors valuing these stocks more? The S&P 500's price-to-earnings ratio, how much you'll pay for every dollar of earnings, is 16. Ford Motor, a huge automaker, is only at 11. And go down to Goodyear Tire, people only want to pay 9 times earnings. The question is, why do people not want to give as much respect to those auto parts makers, Betty?
Okay, and Jim, I know you look at some of these auto parts and automakers, but you're looking at the ones overseas.
Right. Well, some of them are not as far overseas as others. Magna Auto Parts, which is based in Canada, is one that we like. But Continental in Germany, they make tires and auto parts. There's leverage in the auto part business, which is good from an investor point of view, on the upside anyway. And the worldwide demand for autos is really, at this point, driven by the U.S. So
right.
What we're interested in are some manufacturers like Toyota and parts manufacturers. So we think that, you know, that's where the sizzle is short run.
All right, Jim, just hang on, because Julie is looking at another part of your portfolio, which is European banks, something I know that Jim has been sort of nibbling on over the last several months.
It's been really a tough regulatory environment for many of these European banks, Betty. Just today, we are hearing that the UK Parliament and the UK government are considering new rules, tougher rules for the banking industry, and UK Chancellor of the Exchequer, George Osborne, backed these tougher rules, including potential jail time for quote-unquote reckless bankers, the folks who headed up some of the failed banks, as well as deferred bonuses, Betty.
All right, so Jim, why do you like some of these banks?
Well, as the economy turns around, the banks are going to do better. And right now, nobody loves them. They're out of favor. And we think the one that we've owned are nibbling at is BNP Paribas in France. We think it's an improved situation. We have some UK banks, but like HSBC and Barclays for their worldwide exposure. But in general, we've been very cautious, particularly about the European banks, and Paribas is kind of our first nibble at the continental banks at this point. So we're not getting carried away yet.